In fact, I think we should take today as a day to really consider some jobs market data. Okay. So JOLTS came out higher than expected. So job openings in the United States were very strong. Unemployment claims were also very strong, right? Unemployment claims are now falling. Oh, man. So what does this mean? Well, this is more evidence of a strong dollar. If you have less people filing for unemployment claims, more job openings happening in the United States, what is that telling you? Is that telling you that the economy is slowing or advancing? It's telling you it's advancing, right? Obviously, those are good things for the labor market. Now, you'll hear this because this is the weird thing about the difference between, sometimes Chris Pulver will mention the difference between Main Street and Wall Street. Main Street referring to, you know, the average American out there. These are just good things, right? Oh, more jobs out there, you know, less unemployment claims. That should be a good thing, right? It is a good thing for kind of average households to a degree, but why is it not good for Wall Street? And why should we care as traders? Well, because if the jobs market is not if it's not chilling, like if it's actually starting to accelerate, what I want you guys to pay attention to tomorrow, and this is what I will be focused on the most out of the NFP report tomorrow: wage growth. Now, again, what does mainstream want? Obviously, they want wage growth. Wage growth is good for the average, you know, for the person that gets the wage increase. Of course, that's good. But what does it mean if we get like actually, what is forecasted here? Can we look at that together? Whoops. Tomorrow for wage growth, we're expecting 0.3%. So look, if we get wage growth increasing on a year-over-year basis, why is that concerning? Well, it's inflationary. If wages are going up, right? Like I said, it's a good thing, but too much of a good thing in inflation terms is a bad thing. So where the market is worried right now, or why the market is worried right now, is because this dollar keeps going up and the 10-year yield continues to push higher as well. We're threatening to take out this 4.7 level. And if we go back to 5% and break out of there, Chris and I had a long conversation. You get back past this and we've got actual problems. Why? Because if you have rising yields that are aggressively rising, the issue with that is that is signaling that inflation is not only not going away, but it may actually be accelerating again. So if inflation is accelerating again, what happens? Well, the Fed has to get stronger on their restrictiveness, which AKA means rates go higher. Instead of rate cuts, we start talking about rate hikes, and the whole game plan changes. If we start talking about rate hikes this year, stock market's going to be down 15, 20, 25%. Maybe not that far. Maybe a 15% sell-off in the S&P 500 is pretty reasonable if we start talking about rate hikes. But why would we be talking about rate hikes? Well, it's because if the economy is not only doing okay, but it's actually accelerating, while inflation has still not gotten to our target of 2%, right? Oh, I love this. We just added a line chart here to this. Look, inflation here, it was trending down. It kind of stagnated sideways. It's gone down again. Okay, we got excited, but then what happened? Oh no, we're starting to see it go back up. And if labor statistics keep coming in rock solid, it is likely that continues to move higher. So you want jobs data not to crash. You want it to be okay. You just don't want it to be too hot. If the labor market starts roaring right now, it's going to cause inflationary issues because, again, wage increases, start to inevitably happen in a very strong jobs market. And again, that's good for the individuals that get the wage increases, but for the aggregate inflation story, it's not so good. So, we want to continue to watch tomorrow really closely, I think, the wage growth component of the NFP report, right? So that is why we want to pay close attention to that, is because it's the inflationary component. I mean, all of it can be inflationary if you get strong jobs. That's kind of inflationary indicating. However, we need to see what the market probably wants to see tomorrow to chill out on this dollar strength would be some weaker numbers, right? Just to take some of the air out of this rally, out of the chest of this rally, if you will, for the 10-year. 10 years just trending up and up and up. And for a while that was okay because you're like, oh, it's trending up because the economy's holding up well. But if it rips higher, then it signals we may have actual issues to deal with.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
I got to show you guys this because we discussed this in one of our recent Thursday setups idea streams. Gold, despite all this dollar dominance, just doesn't want to quit. I actually made in my Telegram channel, I put this as my quote unquote chart of the day yesterday because I noticed something very unique on the technical side about gold, which is that gold has been, despite dollar strength breaking new highs every day, this 100-day moving average, regardless of if you use moving averages or not, just as a technical reading here, has been holding up beautifully for gold, even though gold being priced in dollars, most of the time, really strong dollar pressure holds gold down. It's not breaking gold here. Like gold is actually putting in on like the 4-hour chart some higher lows, and looks like it does not want to just roll over and die here. What do you guys think about gold? I guess, Miko, for you, I know you also take a look at silver, so look at whatever metals you'd like to, but I got to just say that it's been impressive to me how well metals have been holding up despite an environment where, interest rates are potentially not going to get cut this year, dollar strong, and yet gold continues higher. I mean, we could talk fundamentals. Perhaps there's some, central bank buying that's going on and some concerns about what's happening geopolitically. But just from a technical perspective, this is pretty impressive, isn't it?
Yeah, it is. We were discussing this last week, and USD has still been strong. And since we last spoke, and gold has been strong as well. I have to admit, I'm not the biggest fan of the price action for gold. I mean, I like the price action, like the weekly chart and above. That looks like a very clear uptrend at the moment. So higher time frames look good, but on the time frames I trade, which is the 4-hour chart, kind of struggling to find a good entry for this one. So I'm staying patient. I know I'm looking for buys, still expecting us to eventually get back to the all-time highs. There's been no clear evidence that the trend is changing, so that remains my bias, but I don't really have a setup to the upside yet. But silver I do actually like as well, which of course is a close neighbor to gold, and if gold keeps pushing, there's a good chance silver will follow along as well. And this one looks like a much easier read to me. I can see the clear swing low here, the swing high, looking at this as a correction of that. So there's our impulse, and this is our correction. And if that can start to make some moves to the upside, possibly the higher lows printed already, we might see a push back to the high. So the plan there with silver, pretty much the same plan with gold to take it back to the highs. But I like the price action a lot more here. I like the double bottom. We've broken the highs there. So if silver can start putting in some higher highs and higher lows, I'll be looking for my entry somewhere. Maybe in a retest some structure. It hasn't really mapped out yet, so stay patient for that. But I really like silver, and of course, gold's probably going to keep pushing it as well. But my focus is more to do with silver at the moment.
Yeah, I've got an options trade on silver that is leaning bullish. So if it wants to continue higher, that would be great. What I, of course, without getting too far in the options jungle, basically what I love about selling options is that even if silver goes sideways from here, I would make money. If it goes up or sideways, both scenarios, or even slightly down, I would make money on that trade. But I do favor the long side for metals in general. I do think that for gold that we move higher overall, but like you, I don't love the 4-hour, technicals. It's still very choppy in here. I'd love to see a break of that 2,700 to kind of give us confirmation we're likely going back to those highs. So any pullback from there might be interesting. Marco, same question to you. Metals, what are your thoughts? Are they looking technically interesting at all?
So the metals, for me, I have kind of a similar view as Miko. Basically, I focus on the 1-hour chart, and I'm just not seeing any clear direction on my little 1-hour chart. Bumping it up to the 4 hours, still we're kind of stuck in this overall range. Yes, it is pretty bullish that gold is not moving down with all that dollar strength. So I have to turn this off. But still, I would like to see a breakout of this overall area, like of these highs, and potentially this major low, this low as well. So until a breakout happens, I cannot really give a bias on gold. In terms of silver, pretty similar story for me. I'm not getting a reading here. 1-hour chart just seems super flat and corrective in this like most recent price action. So I would remain patient. I would switch my focus, let's say, more to currencies, because they seem to be moving right now, especially like the dollar pairs, and the JPY seems to be pretty active as well. And I also wanted to ask, so did you sell a put on silver or?
Yes. So I actually did a sell put, and I can show you. Let me just pull this up. So if I go SLV, so what I did is I shorted a put on SLV, which is just a silver ETF. It basically holds a bunch of silver, and then you can trade it in ETF form, which allows you to do options. You could also do silver futures options, but basically what I did is I sold a $27 put on, or shorted a $27 put on the options market. And what that basically means is that if silver goes sideways and it expires, this contract expires, I would still collect the full profit of $1,000 or so. Well, actually about $1,200.
So that's the premium, or?
Yeah, that's the premium. So, the max premium, the max profit that I could make would be $1,200. Now, granted, if this thing drops, then that position would become negative, and I would lose some money. But the only scenario, it's what I love about that is that someone else out there is making this big bearish bet, right? They're betting, oh, silver's going to drop hard. Well, if they're right, then they can make a leveraged profit, which is great for them, not so great for me, since I'm the one fronting the position. But you kind of play the role of the casino with selling options. It's why I absolutely love it, because again, think about it. Most of the time, this market could go up, it could go slightly up, it could go sideways, it could go slightly down, or it could go down hard. And most of those scenarios actually favor the options seller, since the options buyer is betting, oh, it's got to make a hard directional move for me to make a lot of money. And yes, their payout would be big, but it's kind of like the casino offers bets like that. If you think about, like, if you go to the casino and play slots, you're losing a small amount, and then eventually you might win a jackpot. But most of the time, your P&L looks like this. This is kind of options 101, is when you're buying options, that is typically your P&L, unless you're really good at directional calls. But as an option seller, you flip this around, and this actually becomes, your P&L reversed is something like this. So that's why I love selling options. You're basically selling bets to other traders that want to make big directional bets. And although it sounds complicated, it really is not that hard when you start thinking about it. It's like you're just selling bets to other traders and fronting the capital to sponsor the trade, basically. So, just many different ways to play the markets.
Yeah, to be honest, I was looking at your video, the wheel strategy. Super interesting. I recommend it to everyone that's watching right now. And it seems pretty simple. I mean, it's complicated at first, but once you really think about it, it seems super simple. So that is something that I think is worth researching. Of course, capital is going to be an issue. And I don't think any prop firms offer like options trading, which is unfortunate. But if you have big capital, it's a really, really cool strategy.
Well, and the last thing I'll say about that is because I want to push on from options, but the cool thing is look up anyone who is interested in options but doesn't have a ton of capital. Look up credit spreads. Type that into your Google. I actually have a video on it. You know what? I will drop it in our Telegram channel after this stream. I will go find that video. But my options, it might have been the one you watched, Marco, but there's a segment of the video talking about what credit spreads are. And it's a way to do the same approach with way less capital. Like you only need 5K or so, which is still a lot, but for options and stocks, that's not very big. Anyways, let's keep pushing because I got to get to our favorite subject. Not my favorite subject right now. I'm long Bitcoin. It's going against me a little bit, but I like this trade still. I'm going to hold out on my Bitcoin idea here of, I think that we do retake those highs and we continue higher, but it's definitely getting challenged. And if I do see this thing continue lower, I'm going to have to stop out. I'm curious, Miko, what are your thoughts? Bitcoin, cryptocurrency, risk on assets in general, are they going to do okay here in the next, actually tell me if they're going to do well in the next few days so I can close this trade or not.
Unfortunately, I left my crystal ball in another universe, so I don't have it on me.
Okay. If you find it, send it over my way.
Yeah, I'll do that. But yeah, we do have really key support here. And I've been looking at Bitcoin here for a bounce as well. And I thought when was that? Was that Monday? Yeah, Monday. That possibly that was going to be the move that gets us back to the highs and so on and so forth. But we came down pretty hard, and a lot of cryptocurrencies did. And this is really critical support for me. So if that does break, then the next big level I have for Bitcoin is all the way back down at 73K. Now everything is still pretty bullish. The trend is still up. So even if you do break support here and see some downside, I wouldn't say it's game over necessarily. We had a really big move towards the end of last year, so it might just be a healthy correction. But at the moment, we've tested that support numerous times. It's held so far, so I think it's still a great place to buy. And if we can hold that, I do think it's a great place for price to turn around. The only thing I don't like about Bitcoin at the moment is that we are just a little bit stagnant in just the entirety of this move. It'd be nice if we had a strong up move and then price was kind of moving sideways a bit more, because then I'll be like, okay, maybe we break higher. But this being as corrective as it is, might see a bit more of a bigger range develop before we do actually really push on. But yeah, as long as we hold 94K, I do think we can bounce, break through, might see a push back to 73.
Bitcoin is so difficult because it is so binary. Well, actually, I guess not. I was going to say it's binary because it's usually in just like this massive uptrend or this massive downtrend. But we together on this stream, on these Thursday sessions, watched for like 6 months where Bitcoin went absolutely nowhere, went sideways. I think what's possibly happening is maybe Bitcoin, the world of Bitcoin is watching and waiting to see, is there going to be more positive news out of Trump? Or was that kind of a, kind of a sell the crowd moment? That's kind of from just a news perspective. Is Trump going to come out and actually put into place some pro crypto stuff when he's president? Or was that a way just to rile up the crowd and get some interest in him? And we don't really know until, actual decisions get made and stuff happens, but there's a lot of rumors around there. So we'll see what happens with that. Maybe that's what takes us in or out of this consolidation to the upside, or maybe to the downside, right? So we'll have to see. Marco, same question to you.
Mhm.
Crypto in general, whether it be Bitcoin, Ethereum, whatever you want to look at. What are your thoughts on it right now?
Yeah, so Bitcoin is a bit of a sad story right now. Ethereum as well. The big bearish indicator for me is two big bearish candles printing on the daily chart. And it's not looking the best currently. So I already see two very large bearish candles, although they have not printed one after the other, which is kind of the most bearish sign if it looks like this. So there is still some hope, but I'm not liking what I'm seeing right now. And also we have the very key level right here. I think you're spot on with the Trump analogy. I think everyone was waiting to see if something will actually be implemented. And if it doesn't get implemented, then probably a correction could happen. But overall, I'm still pretty bullish on Bitcoin. So even with a larger correction, I would expect for us to still go up in the very, very long term. If you're a short-term trader or like a short-term investor, I would have some key levels here, and I would probably be looking to maybe make my position a bit smaller if we, of course, break those key levels. And yeah, basically I had a friend selling into the 100K mark. So when we were approaching the 100K, he basically sold into it, I think, at 96 or something like that. So I think also a lot of people sold at just like approaching 100K, and most of them are now sitting on the sidelines looking into getting back in, but they don't want to get back in where they got out. At least that is what my analogy is. So yeah, I think there's a lot of people on the sidelines right now, and we have some developments, of course, with the US that we need to wait out.
Yeah, I think that 100K level is, we talked about it. It tagged 100K, but I think that we are still testing that area. Bitcoin's so volatile. I just pulled this up. Let me pull this up again. Average true range of Bitcoin. I like to switch this to instead of a line, I like to do area because I think it's a little easier to see. But if we look at the kind of daily price move of Bitcoin, what we can see, it's moving around $3,800 per coin per day on average. That's just going back over, what is this, a 14 day? Yeah, it's a 14 day. So the reason I bring that up is that, okay, you look at Bitcoin, you say, well, it's moving like, let's say 4,000 per day. 4,000 gets us not quite to 100K, but we're still within like 2 deviations from that of 100K. So we're still just like testing this big secular area of 100K. And, I think the market can kind of see both ways. We could see 100K becoming a new ceiling or a new floor. And we're waiting to get that confirmation. Clearly, we're consolidating. I don't think it's random. I think this is very specifically oscillating right around 100K, trying to figure out, is this going higher from here, or is that kind of a longer term cycle high? And we'll see. I'm using stops on my idea, so I am long Bitcoin.
We're approaching highs in dollar CAD. Right. That's where I'm getting profit. There's my dollar CAD. I want there to be profit. So this is where, if we have a non-farm payroll spike, that would be perfect. And that would be a very typical thing. I'm sure there's traders that are lining up to sell right now that have been stuck in this trade for months. I've been long. And if we, test this level, hit these highs, you get my profits taken, that's great. I want closing out 1, 2, 3, 4, 5, 6, 7 trades. 1, 2, 3, 4. Took one off. So that's 4 and 7. I've got 10 trades running long to that profit target. So I hope non-farm tomorrow with the CAD and the dollar spikes up here. I don't think we have to stop right at 4,500. I think we can end up getting back to that 2020 and 2016 high, which is up to like 46 and change. But again, measure my move, pretty conservative, pretty happy with that trade overall. Dollar Swiss, same thing. We're at 91.16. My take profit is at 92. So if we have any pullbacks, I'm still going to add to this position. If we get another thrust on the dollar, I'm getting a nice little profit at 92. Dollar index. I don't think this is something I want to fight. If there's any dips on the pullback, dips here, I'm buying more. So I think as long as the dollar stays above 106 or 105.50, it is still a buy trade. I think the dollar, and this doesn't mean good things for the equities market, but a dollar getting stronger means that the 10-year yield is still going to be pushing higher. That there's the inflation risk out there in the U.S. Whether it's sticky or not, we'll find out more next week. So we have non-farm payroll tomorrow, And next week on Wednesday, Thursday, I believe, I go Forex Factory calendar here. Let's go to next week's trading. So we have Tuesday PPI, we have Wednesday CPI. Again, you notice here, it's probably by design. There's no forecast yet. We'll find out when the forecast is. Maybe it's Friday, maybe it's Sunday, Monday. But I'm interested to see, like, what is the year over year? What is the month over month? Is inflation still getting stickier? Does this have any impact on the Fed? I mean, I don't think we're going to see a huge drastic improvement in inflation. If we print higher, that's probably not good either. If anything changes, it would just probably cement the idea that the Fed is likely not cutting much. Maybe one cut in 2025, maybe no cuts. Maybe if inflation is high enough, maybe there's that talk of a hike, which I don't think the market's going to like. So anyway, dollar index, I still think it stays bid. This would be an unfun trade. Okay, if the dollar gets stronger, if obviously you're participating in dollar strength, that's fine. Euro dollar heading towards parity. Okay, cool. But I think if the dollar heads up here, what I'm more excited about is not necessarily taking like the extra strength in the dollar, but more so when and if this ends, taking the collapse of the dollar. That to me is going to be a bigger, more profitable trade with a price pattern that we can see and get confirmation on, and then measure a trade. So if all this is waiting, get a price pattern, and then trade like some type of measured move head and shoulders, you can do that on 6 currency pairs or 7 currency pairs, there's a lot of money to be made. So, let the market do its thing. I'm not that interested in chasing dollar strength after this was already a very profitable trade. Like, that was me getting into dollar strength off of support. At this point, it's kind of, to me, it's kind of ran its course. Could it go higher? Yeah, of course. The dollar can still get stronger. To what degree? Maybe euro dollar heads to parity or lower. Maybe we revisit the 2022 lows at 96. Maybe the pound dollar gets below 120 again. Maybe it heads down to 110. The pound dollar did not hit parity. That'd be pretty awful if it did. So anyway, we'll see. But there will be some type of ramifications globally, trade-wise, imports, exports. This is the milkshake theory. If the dollar gets super strong, all the global liquidity is drying up, and that means tighter markets. So anyway, that's the dollar. We'll go through some currency pairs. Let's go through a few more things. SPY, again, watch your levels. Basically, we have the FOMC breakdown, PCE low, tested during the holidays. You had a kind of the, I guess if you're going to call that the Santa rally. The Santa rally was PCE just shy of the FOMC breakdown. And then we pulled back and we pulled back. So it's just kind of narrowing right now. A little bit of this and a little bit of this. So, I mean, I guess you could argue either way that maybe this is still seen as an accumulation zone for the market to go back up. Maybe. I found, let me see here. I found this, which I thought was kind of interesting. Coming into a new year and a new presidency and a new party. So Republicans taking over, executive branch, as well as judicial, right? So we've got Congress, Senate, House, and President, all Republican, and Democrats lost. So post-election year, after an incumbent party loses, again, this is a lot of data, which is why I like this. So this goes back 74 years, 75 years. And even if you started with all post-election years, which is in green, Q1 post-election years. So this would be, 2024 is election, 2025 is the official year. Q1 is not that exciting. In all election years, it's not that exciting. But in a switching from Democrats to Republicans or Republicans to Democrats, it's a little bit worse. So Q1 is typically not great. Now, I don't know if that's going to be the case again. This is obviously aggregated over 75 years, but there is potentially a dip coming in Q1, which would offer a buying opportunity. And then again, maybe a dip coming into Q4. Okay. So could this be, a challenging year? Yeah. I think that if we have a move of, we've only moved like 3 to 4%. So, I think traders look at this like, oh my gosh, what's going to happen? This move right here is only about a 3 to 4% move. So there's a lot of potential flexibility and elasticity in the market to give us, let's say, like a 10 to 20% swing. And I don't know where that swing is. I don't know if that's up or down. I don't know if it's down first and then back up and then we settle in the middle. I don't know if it's down first, down further, and then we settle with a little bit of recovery. Like, I have no idea what's going to happen. But, you know, operating in a 3 to 4% range is likely not going to be what the market does all year. I think we're pretty much in agreement. Like, the market's not going to stay sideways forever. If the market did stay sideways within like a 10% window, that happened back in 2015 and 16, I could see something along those lines. It's going to be obviously something we'd have to trade. Like, if we hit these lows and do them again, well, that would be support to trade. And then until we break those highs where momentum's getting stronger, like, find support, trade support. Manage your trades. I'm not doing a lot of stuff that's long term. The trades I'm out to like 2026 on or 2027 on, I am also selling options against them to lower my cost basis and also turn those into income trades. So if I'm, for example, TLT, if I believe TLT longer term bonds can go up, then what I'm going to do in the next 2 to 3 months is I believe they can go up. So I want to sell against them to lower my cost. And if I take any type of income trade or profit, I'll just reestablish the position and keep doing it. So I don't know, but let's check the bond market. I mean, nothing's open today, right? Equities closed. I think we have futures market open a little bit, or we don't. Yeah, they're done. Like, there's nothing. Yeah, there's nothing going on. All right, so there's no market. That's cool. S&P strong rally may cool off in 2025. Analysts warn. Oh no. It's not like we haven't talked about it for 2 months.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.